What's going on YouTube? So I just dropped a video a couple days ago about building wealth as a barber. Simple steps that anyone can do. And the response has been amazing. It got a lot more views and a more positive response than I expected. I've been dropping these videos on a separate channel for a while now. Some of you guys are obviously don't want to go to another channel and learn these things, but you're willing to watch them on this channel and you appreciate them. So, I just want to get the information heard, and I wanted to touch as many people as possible because I know it can help. So I'm gonna drop this video. It's not a second part, but it's still information that I think is vital for barbers especially. And this one covers taxes. That's one of the common questions people ask. They ask about taxes, like how should I have an LLC? How do the taxes work for barbers? And so this video is gonna break it down as best as I could do it. I'm not a CPA, I'm not a financial advisor. I'm just sharing my experiences with you guys, and I'm gonna learn with you. So enjoy the video. Let me know in the comments if you already seen this video and you've actually used this information to help you. Let me know, in the comments below. It always makes me feel good to hear some testimonials of people that have already watched this information and used it to better their lives. So enjoy the video, guys. Excited, man, because today we're gonna cover what entity you should have. So if you are new to the channel, please go through to the earlier videos. You can skip the reaction ones if you're not interested, but the first like 3 videos are kind of essential. We're kind of picking up from there. And so I think in the last video I was teaching different steps like how to manage your money flow, and we covered a basic example of how to do that if you don't really have a money flow strategy for yourself. And so today what we're gonna do is look at that money flow and decide which legal entity is best for you. Should you just operate as somebody who's self-employed, get a DBA, an LLC, incorporate, elect to be an S corp? We're gonna go through these options, but I'm not just gonna tell you how to do it because I am not a guru. I'm just an entrepreneur that's passionate about personal finances and building generational wealth. And that's what this channel is about. So if you're new, definitely subscribe and smash the like button. Let's get started. So I think for the most part, people are generally going to be either self-employed to start off or an employee. And what I learned from a book called Tax-Free Wealth, it's a Rich Dad series book. I definitely recommend you check it out. And it goes over basic examples. It kind of changes your mindset and the way that you look at how taxes are designed, and whether or not, as somebody who might be a teacher and collects a W-2, or an employee, or somebody who's self-employed, it kind of makes you think differently about how you manage your funds and your income so that you can take advantage of some of the tax laws and incentives that are out there. And you could do it regardless of how you're paid and what your career is. And the one thing that this book pointed out that kind of changed my outlook of how taxes are designed is how it talked about someone who's an employee. They can literally take advantage of some of the tax incentives and laws that are out there by just acting like a small business. You don't even have to incorporate. You don't have to get an LLC. You can act like a small business and take advantage of a lot of these incentives that you can't take advantage of with a W-2. And so let's say you have a W-2. The one thing you need to do is add some type of income to your life. This could be you create an account on eBay, on Amazon, you do Uber on the weekends or at night, you sell stuff on the Facebook marketplace. Any side hustle that you do to create some type of revenue, the IRS, they want you to pay taxes on it. They don't want you to be hiding that stuff. And so by having these side hustles, you are now considered self-employed and you're generating this income. And so some of these earlier videos that I posted in this channel will definitely help you manage how you take all these new streams of revenues so that you can manage them and give yourself a foundation to take advantage of the incentives that businesses, self-employed people, and corporations take advantage of that, generally speaking, most W-2 employees cannot. And the only reason why is because they don't act like they're self-employed. So with that being said, let's say you got your bank account set up and your money flow system is on point. And now you need to figure out, do you need to have some type of separate entity? Well, the first thing I would tell you if you're just starting out, it's probably best to be self-employed. And so I don't want you to depend on me and my information. Let's do the research together. So there's no better source on this topic than irs.gov. And if you look here at what I highlighted right over here, you can see you are generally pass as self-employed in the eyes of the IRS if you carry on a trade or business as an independent contractor or sole proprietor, if you're a member of a partnership or a trade or a business, or you're in a business for yourself, including part-time business. One of the downfalls of being self-employed is that you do pay what's called a self-employment tax. This is like 15.3% of revenues on top of the federal income tax. You can see how that can get pretty expensive. But as an employee, you're also paying some pretty high taxes with little to no write-offs. And I know you see the Social Security and the Medicaid that's getting taken out of your paychecks every single pay period. And if you look at the place where I just highlighted right now, you'll see you got to pay a self-employment tax if you've earned more than $400 for that year. Now, here's why I don't care if you have a W-2 or you're self-employed. You should have a home office because you can write off whatever that percentage of the home is. You can write off the utilities, you could write off the rent, you could write off so many different things. You want to take advantage of that, especially if you're making a decent income. Now, I'm going to leave this up to you guys to go to irs.gov and do research for yourself. But I would suggest right off the bat, if you're just getting started, you don't know whether or not you're going to make some real money. You don't know whether or not you're going to make $10,000, $15,000 from your new side hustle. But you do know that you're going to be able to take advantage of some incentives that self-employed and business owners get to take advantage of. Now, remember that self-employment tax that we talked about? Does that 15.3% really matter if you're only making $1,000 a year? Are you really going to go out of your way to go get an LLC, a DBA, an S Corp? Are you really going to do that? You're going to spend more money than what you made for the year or what you're going to pay in taxes for that year by just creating these new entities. And you're also going to put on more work for yourself, and you're going to add on to your accountant or CPA bill. It's not really worth it in the beginning, so I never suggest, in my opinion, I would not. And I'm not a CPA, so this isn't advice. Again, you got to fact check me. But me personally, I'm not starting off any new endeavor with any type of LLC or anything like that till I know it starts to make money. Unless it is necessary that I have an EIN or something like that. But even then, I'd probably do a DBA. Now let's look up what a DBA is. Cool. So I've highlighted on the screen what a DBA is. With a DBA, you'll also be able to apply for a federal tax ID number, which is required. And when you decide to open a bank account in the name of your business, acquire credit, or make payments in the name of your business, you could just get a DBA, get your federal tax ID number, open a business account. You don't really need a federal tax ID number or DBA to get business credit. You could just say you're self-employed and put your social security for something like that, right? The problem with a DBA is you don't get limited liability protection. And so that's why some people are thinking to themselves, I'm going to skip a DBA, go straight to an LLC. This does make sense, but for most people, it doesn't. So now that we know what a DBA is, and that's probably the next option after seeing whether or not this new side hustle you've created is worth getting a DBA or some type of business entity. If you're not a W-2 employee and you're self-employed, then you would just start off again as being self-employed. And if you feel like you need a DBA, then go ahead and get a DBA because an LLC isn't for everyone. Now let's look at an LLC and let's explain what an LLC might be for. And again, guys, I'm learning with y'all, so you gotta fact check me. Hit up your CPA, your accountant. If they're not accessible, chances are, bro, I would be looking for a new CPA or an accountant because I want a long-term relationship with these people. They're so important when it comes to my future and my family's future. And so I want to make sure that they care about me and they're there to answer my questions. Okay, so you can see I looked up what a single member limited liability company is, and you should look it up too. But I will say this, an LLC, when there's only one owner, it's looked at the same way when it comes to taxes for tax purposes. And you can see where I highlighted, it's looked at the same way as somebody who's just self-employed. So you're not saving any taxes here. You can get the same tax incentives as an LLC being a single member. You can get the same incentives being a self-employed individual. So there's really no reason there to become an LLC. I highlighted it here. When you Google this stuff, that's always one of the benefits of being an LLC. Sure, that is a benefit if you're going from a W-2 to an LLC, except when you go from a W-2 to any type of sole proprietorship or any type of other entity besides being an employee, you do get tax advantages. We talked about this earlier. This is interesting. Let's check this out. This is interesting because this is true even if you had an S corp, even if you were just self-employed, even if you operate as a DBA. And I could be wrong, check with your CPA, but generally this would only not be true if you operated as a C corp. And C corps are generally used by big companies that are going public because they want more than 100 shareholders. They want to be able to have 2 million, 1 million, 100 million shareholders because they're going to go public, or they're looking for capital, they're looking for investors, that type of thing. This is something that I've learned throughout the years of being a business owner and an entrepreneur, trying to scale, right? The only benefit that I can think of from somebody who's self-employed to an LLC is limited liability protection. And you can see right here from Investopedia, which is a decent source, in the United States, whereby the owners are not personally liable for the company's debts or liabilities. So it protects the owners from losing personal things. Here's what they don't advertise though, guys. There's a thing called a corporate veil. And so just because you have an LLC and you're operating under an LLC doesn't mean you're necessarily protected if, let's say, that LLC gets sued or goes bankrupt. It's not necessarily protecting you from personal assets. And the reason why is because if you're not operating that LLC the way the IRS says you should be operating that LLC, there's a thing called piercing the corporate veil. And so if you can see on the screen, I've highlighted what I'm talking about. It says it is expensive and difficult to pierce the corporate veil and get judgment against an individual behind the company. What they look for is commingling in funds. Whoa. What they're looking for is commingling in funds. And so this is why your money flow, your money management, having these bank accounts set up is so important. This is why I started my series of videos on this channel the way that I did, because that is your foundation. If you don't operate your businesses the way I showed in that money flow, in those steps of how to manage your money, then what's going to happen is you might commingle some of your personal funds with your business funds, some of your personal expenses with your business expenses. And what lawyers will do if they really want to pierce the veil, because you got some assets and that's the only reason why you would get an LLC, they would be looking for that. And if they find it, your LLC is donezo. They will pierce it and they will still go after your personal assets. And so here's what I'm gonna tell you. If you're starting off as somebody who's self-employed, or you're a W-2 employee who's trying to get this side hustle going so you can take advantage of some of the incentives that business owners and self-employed individuals get, the only reason you should hurry up and get an LLC is if you feel what you're doing is vulnerable to lawsuits, can bankrupt you because you're putting some serious money into it, in which it's more like a serious business, or you're getting into a partnership because you never know what your partner might do that will affect you and your personal assets. So anytime you go into a partnership, you should definitely get some type of protection. Your partner could get sued, get hooked on drugs, something crazy. You never know. You don't want to be liable to their actions. But if you have no assets and it's just you don't need an LLC, because that's the only benefit you would get. If you got a $300,000 house, but you owe $290,000 on it, no lawyer is going to be like, yo, I'm going to take your case and we're going to sue you. But if you have assets, if you have real estate investment, if you have a nice 401k, those type of things, if you got a good amount of stocks, I would get an LLC just to be safe. But always fact check me with your lawyers. Get with a lawyer and just make sure that my ideas won't put you in a bad situation. So now we've covered LLC. Let's take a look at the next step. And for me, that's an S corp. Now, again, I'm not a guru, but I love to research this stuff. And so I think it's better for somebody who is a guru at this stuff to explain it themselves, and we'll just react to it. We'll react to it and then I'll give you my experience with it.
So what is the difference between an LLC and an S corp? First off, we are Nuance Financial. We're based out of Minnesota, about 20 minutes south of Minneapolis.
Shout out to you guys.
We're an accounting, bookkeeping, tax, and payroll firm that focuses on small businesses, nonprofits, and anyone who earned 1099 income. And we're the Dave Ramsey endorsed local providers in the southern half of Minnesota.
They gotta be legit then.
What's the difference between an S corp and an LLC? Well, first off, both of them are actually LLCs. When we refer to an LLC here, we're talking about an LLC tax.
I do want to say this. You could be incorporated and also elect to be an S corp. So the reason why he's saying both of them are LLCs is because the title of this video is LLC versus S corp. But if you're incorporated, you can go from a corporation, a C corp, and elect to be an S corp as well. Fact check me.
we'll just call it an LLC. And then when we talk about an S Corp, we're actually referencing an LLC tax as an S Corporation. Both LLCs and S Corps provide business owners with a couple of things. Legal protection so that there's a corporate veil between the company's assets and your personal assets. They provide some operational advantages like partnerships and the ability to collaborate with others.
So we talked about those two things, right? The partnerships and being protected from your partners doing stupid stuff. And we also talked about the whole legal protection thing and the corporate veil. And you guys know that that's pierceable. We don't want to be pierced. We want to make sure we're doing everything. We're operating our LLC the way it's supposed to be. Let's continue.
And they both serve as pass-through entities for taxes, which means the profits and losses will flow through to the business owner. We're going to be figuring out your tax on your net profits. Now, net profit is what's left over after you subtract all your deductions and write-offs from your business's gross income. Now, in an LLC, your entire net profit will be subject to what's called self-employment tax. Remember when you were an employee at another company and your paycheck had that little FICA or Medicare deduction?
I've never seen this video, but you guys remember I brought this up.
Well, when you have an employer and an employee relationship, your employer would have paid half the Social Security limit and Medicare tax, while the employee paid the other half. Now that you're self-employed, you'll get to pay the tax of 15.3% on all net earnings up to the Social Security limit, which changes each year, but is at $118,500 for 2015. After you hit the Social Security limit, all your earnings above that, you'll owe Medicare taxes, which is 2.8%. Then, after you pay your self-employment tax, you'll be subject to state and federal income tax. This is simplifying it a bit, but essentially you'll be paying an increasingly higher or marginal tax rate on your earnings. The more you earn, the higher your tax rate.
This is also why where you live matters. This is why it drives me crazy that people are willing to live in California, pay the crazy property taxes, the crazy state taxes, the crazy cost of living. If your pay would not be affected by moving away from California, you would get tens of thousands of dollars in a raise by just moving to a state like Washington, like Texas, and like Florida, which means you live in paradise, which is why I live in Florida, and you'll pay zero in state tax.
With an LLC, you'll pay 15.3% self-employment tax on all of your net profits.
Plus state, plus federal.
You'll pay state and federal income taxes on your personal tax return.
Plus all the sales tax you paid for the year, plus the property taxes you paid for the year if you live in a home, if you bought your own home. This is why people who are informed do not like people like Bernie Sanders, because we're thinking to ourselves like, bro, we already getting taxed heavy.
Focusing just on the self-employment taxes for a fictitious LLC, taxed as a sole proprietor. If you had taken in total revenue of whatever, then after your deductions and expenses, you had a net profit of $100,000. Your self-employment tax bill would come out to $15,300. So we've got $100,000 in net profit and $15,300 in self-employment taxes. Breaking that down a little bit, that's a monthly bill of $1,275 just for your self-employment tax.
Wow. How many of you guys are making 100 grand and putting $1,275 to the side every single month just for self-employment tax? You still got federal and state tax to worry about, plus property taxes and the sales taxes that you've been paying. Yo, Florida's at like 8 point something in sales tax.
Your self-employment taxes, you'll still owe state and federal income tax, which if you were single and had, let's say, $85,000 in taxable income, just your federal income tax bill would be about $17,325 on top of your self-employment tax.
Whoa.
That's not even factoring in your state income tax, property taxes, or anything else you pay.
I have never watched this video and it's on point. So this is just confirming. Now, again, you still got to check with your CPA and your lawyers, your tax lawyers and stuff, but we're kind of saying the same thing and I've never watched this video.
$15,000 in federal income tax is just for a single person paying on $85,000 in income. So this puts your total tax bill, excluding fees, sales taxes, property taxes, state income taxes, or other dues, the total tax bill at a conservative $33,000 a year. That means you're taking home $8,300 a month and writing a check to the government for $2,750 a month, just for self-employment taxes and federal income taxes.
That's
if
crazy.
That doesn't get your heart racing a little bit, I'm not sure what will. So the question is,
look at me, guys. So look at me. When I tell you how important it is to get informed with tax laws. Remember that book I mentioned earlier in this video? Go read the damn book. This is the biggest expense in your lifetime. And society does not teach you this. They teach you your home is your biggest expense because they don't want you to start figuring out, oh my gosh, what are you guys doing with my money? When you're informed, you start reading in between the lines. You start seeing the bigger picture. I just made 100 grand, worked my butt off the entire year for this, and I had to give the government $33,000. Let's continue.
Well, the most popular strategy employed is incorporating to an S corp.
So he said, what can we do about this? Now, guys, again, like I said, it doesn't make sense to be an S corp if you're only making if you're not making a lot of money. It doesn't make any sense to do this whole S corp thing. This is why I always tell people, start off self-employed or get a DBA if you feel like you need it. Get an LLC if you feel like you need it, but there isn't one answer for everyone, right? At least now you're informed and you can get creative and you can look at your situation and solve it. So now let's look at why is S Corp a great strategy and why I've been pushing it to barbers or people who have a side hustle that actually makes a decent income, why it makes sense for those individuals.
With an S Corp, you'll incorporate and become an employee of your corporation. Then you'll take two forms of income. The first part of your income is that you'll pay yourself a salary.
Yes.
And the second part of your income is what's called a distribution or a dividend. So we're going to split up the income into these two parts, the salary and then the distribution. What you'll see in a minute is that the salary is subject to the 15.3% self-employment tax, while the distribution is not. So you're paying 15.3% on your salary, but not on your distribution.
Okay.
Because the distribution income isn't subject to that 15.3% tax, the temptation can be to falsely shift all your income over to the distribution and not take a reasonable wage, which is why the first part of your income or that salary or wage or payroll must be reasonable according to the IRS. There are multiple factors that dictate what kind of a salary you need to pay yourself. The salary needs to be reasonable for your experience, comparable salaries, economic conditions, and a bunch of other factors. This is super important. You must take a bona fide, reasonable salary.
Let me add on to that. So let's say you're a teacher and you already get a W-2 check, but your side income is starting to become substantial. Obviously, you can take a smaller reasonable salary from your S corp because you already got a W-2 that's coming in. And so if you were to get audited, you would say you take a very small salary from your S corp because you pay most of your expenses with your teaching salary. As a barber, you would have to look at research of what people in your industry tend to make. And I can tell you, if you do a simple Google, it's dumb low. It's like $24,000 a year. Check with your CPA. Reasonable salary would typically be lower than most people would expect. At least for me, it was. But check with your CPA.
A look at a fictitious S corp example. Now, looking at the same $100,000 of net profit, you'll pay yourself, for this illustration, a $60,000 salary. Then you would take out $40,000 in distributions. This is just an example. The tax benefit is that the salary is subject to that 15.3% SE tax, but the distributions are not subject to the SE tax. This means that $40,000 in distributions aren't subject to a 15.3% tax.
I've seen accountants say, they've seen as little as 25% of the revenues be someone's salary and up to 50%. Now, this is a bit higher, but obviously if you are a consultant for hospitals or a consultant for dentistry, you probably would be on the higher side. And so you don't want to risk getting in trouble with the IRS if in your field most people get paid $60,000 a year and you don't have a W-2 to justify a lower income. Because what happens when you get audited, and I'm sure he's going to touch on it in the video, is if they audit you and they think that you don't have a reasonable salary, they'll just give you that self-employment tax for the full 100K, and then you wasted all kinds of fees, accounting fees, payroll fees, and energy for no reason. So I would play it safe, be conservative, and make sure that your CPA agrees with you.
Your total self-employment tax due down from $15,300 when you were an LLC to $9,180 as an S corp. That's a 40% decrease.
Whoa.
Rather than paying $1,275 a month in SE taxes as an LLC, you'll be paying $765 a month as an S corp.
Some of you self-employed people can't afford insurance, but if you were under an S corp, the S corp would be paying for top-notch health insurance. Some of you guys want a nicer car. Boom. Get to an S corp and it'll pay for that car. You know what I'm saying? Like, look at that. That's $510 a month in savings. Think about that, guys.
That means you've essentially freed up $510 in monthly cash flow in this scenario. In a scenario like that, $510 a month can easily help you save for retirement, pay off your mortgage early, hire some help, reinvest into your business, advertise, or invest in real estate.
I love investing in real estate. And this is what I mean by, guys, if you want to make more money next year, if you want to raise your income, there are low-hanging fruits that we can go and grab. For example, looking at what entities would benefit you best, like a S corp, for example, where most people would go get a second job, most people would go back to school, do a career change, look for a different job. Guys, there's low-hanging fruit out there. You just gotta get informed.
If you've already become an LLC and you like the idea of becoming an S corp, you have to file for an S election in order to become an S corp before March 15th. That's a whole month before April 15th when your taxes are due, or you'll have to wait till the next year.
So obviously it's too late now because it's March 28th, I believe. I would call still and see what they could do. Call your CPA as well. See if maybe right now with the whole coronavirus thing going on, they'll still help. But if you elect after this date, then it won't go into effect until next year. Okay, so that's that video. And I think that about covers it. We talked briefly about a C corp, but generally speaking, you do not want a C corp because there's a thing called double taxation that you want to avoid. If it's just you, it doesn't make sense. Maybe later on we'll go into the whole C corp thing, but I think this is the meat and potatoes, and I hope at least now you're informed to be dangerous enough to call your CPA and ask some creative questions and understand what their feedback means. In a later video, we're going to go over how to set up this S corp because you do have to elect to be an S corp, and then how to manage it. I use a combination of a CPA and QuickBooks Online, but there's so many different ways to do it, and the best way is to do it the way your CPA wants you to do it. Yo, but with that being said, guys, I appreciate you guys for checking out another video. If you have any suggestions for another topic that we should cover and learn together, please do comment it below. I do read the comments. Share the video with anyone you think that this would help, because the more people that can be better financially off, the better for everyone. Let's bless someone with this information, guys. People don't realize how important this is, but we can do our part to shift that culture. I appreciate you guys. Smash the like button. See you guys in the next video.